Hello and welcome to this very special edition of Newsmaker. Special because our newsmaker today is a global banker, a central banker, a policy maker, and an academic all rolled into one. My guest is the chairman of Standard Chartered PLC, Dr. Jose Vinyals. Thank you very much, Mr. Vinyals, for joining us. But give me a moment before I shoot my first question. Mr. Vinyals is not just the chairman of Standard Chartered Bank. Before he took over here, he was the financial counselor for the Monetary and Capital Markets Department of IMF and their chief spokesman on several financial stability issues. He was also a member of the Financial Stability Board. And before that, he was deputy governor of the Bank of Spain, the Central Bank of Spain. And before that, an academic at Stanford University. So a many-sided perspective on global economy is what we are going to get. Thank you very much, Mr. Vinyals.
You're welcome.
Well, for starters, there seems to be several speeds the ECB has already cut. Do you think that the US economy is too strong for us to expect rate cuts this year, or would you still expect cuts?
Well, I think that uncertainty has increased regarding the path forward of interest rates in the US. My personal expectation would be that there would still be an interest rate cut this year rather than next year. Now, whether that's going to be one or two remains to be seen. That is going to be data-driven, and whether it happens at some point in the second half, which is more in the middle, or at the very end, again, will remain data-driven. I think this is something that markets care very much about. In terms of the economic impact in the U.S. economy, to cool it down and to bring inflation down, I think that the impact of cutting rates a little bit sooner or not is not so large. But markets do care a lot about the timing because of obvious reasons.
Okay. Well, now, let me come to the strength of the economy itself. The U.S. economy in particular, the jobs data was very strong, hourly wages was very strong. Are you getting a sense that we are in for a resilient global economy?
I think the United States is one of the key reasons why, not the only one, but is one of the key reasons why the global economy has remained resilient, in spite of having been affected by a period of the biggest tightening of monetary policy since the early 80s. So the fact that the global economy has remained resilient and on track for a soft landing, it's remarkable. The United States has been a key reason for that. I think also the large emerging market economies, which have been resilient, have also been a factor in making sure that we don't have a global recession. Now, having said that, the economic situation is very heterogeneous. And given we're in India, I'm happy to say that emerging markets continue to perform well, with growth rates which are about 4%, and that emerging Asia is leading with around 5%, and of course India is way above that.
Yes, way above that. I agree with you. I'm coming to India in just a minute, but I just wanted, you're a financial stability observer even for the IMF for a longish bit. Do you think the stability threats are out of the window, or do you think that commercial real estate exposure to such things can still be a red flag in some US banks?
Well, I think that the issue in US banks has been addressed after what we saw in March last year with Silicon Valley Bank and others. So I think that has been under control from the regulatory and the supervisory point of view. There may be some residual concerns regarding commercial real estate. But what I worry about more in terms of global financial stability is more the accumulation of debt that has taken place, and the fact that because of COVID, first because of the global financial crisis, and then because of COVID, we have gone to much higher numbers regarding global debt in advanced economies as well as in many emerging markets. And I think that this is something that in a context of the higher interest rates that we have seen in recent years is not helping. And going forward, even if interest rates come down, they would be at higher rates than what we experienced in the low for long period, and even before because the new normal, I think, is going to be higher than the old normal. And therefore, that, I think, is going to put the public finances on a more difficult path. And that means that fiscal consolidation remains a very important policy area of attention by many, many governments around the world.
Oh, yes, and not the least the United States itself.
Absolutely.
I mean, we've seen the 10-year not climbing down despite softer economic data. But I'll come to that time permitting. What about China? You know, are you worried that it will slow down considerably, or do you think the economy there is stabilizing?
Well, I think that the Chinese economy, if you look at the performance of previous decade, it has nothing to do with what we're seeing now. But that's natural as well.
Yes.
As countries, as economies grow and develop, then the growth rate tends to come down. It is true that China last year had a growth rate of 5.2%. There were lots of base effects. It was also held by policy, but it was a good growth rate nevertheless. And this year, what we expect, our in-house sort of forecasts are that the Chinese economy will be close to 5%, which is not a bad rate. Of course, there are challenges in the short term because the Chinese economy is is composed of an old economy.
Yeah, it's a two-speed.
That's right. It's a two-speed economy. It's the old sort of economy, which is not as dynamic, and the commercial real estate is exercising a negative impact there, for example. And then there is a new economy which is very vibrant. So you have to look at both sides. But again, economy of such scale, which grows this year, at rates which may be close to 5%, if not 5%, which may be the government target. I think this is good news for China, and it's good news for Asia because of the impact that China exerts, and it's good news for the world. And then over the medium term, the growth rate in China will very much depend on the capacity of the country to grow productivity, and that will depend very much also on the dynamism of the new economy sectors.
Oh, yes. I mean, I'm asking you the questions on China and the US primarily because, the global ambience is very important even for a largely domestic-facing economy like India. But before I come to India, one more question on China. Do you think it will be a major disinflationary force? We hear a lot of complaints of traders and economists saying that China is cutting prices, EVs, vehicles, so much to capture global market share. Is this going to persist as a disinflationary force, at least this year?
Well, I think that you are seeing now some reaction on the part of the advanced economies markets, which are trying to protect themselves against the Chinese competition in this area. That is something which will happen more over time. I think that China has, produced these vehicles at lower prices, at very competitive prices, which cannot be matched, but by what advanced economies are producing. So I think that in that sense, you have some, pressures towards reducing prices. But of course, there are many other prices which constitute the overall rate of inflation. And I think that China is no longer the source of this inflation for the world that they were in the past. Okay. And of course, going forward, we shouldn't expect that. I think that China's impact is going to be more on the growth side than on the price side going forward.
Okay. Yeah, no, I'm not expecting like the great moderation of the 90s, but I constantly hear manufacturers and economists saying that China is cutting a lot of prices, especially in the EV sector.
They are, and this is having some impact. But of course, nothing like what was the case in the past.
In the 90s.
And now I think that the sources of domestic inflation also in advanced economies are very clear. And these are the things that have to be managed by central banks. And they have managed them well because the interest rate increases that have taken place have led to a very significant reduction of inflation. It's been kind of like a Christmas tree. Inflation went up and inflation came down.
Absolutely.
And what was remarkable is that this coming down of inflation took place in the context of labor markets which were at or close to full employment, which is something that in previous disinflationary episodes hasn't happened.
Okay. Well, now I will have to come to the all important questions on India, but after a very short break, we are back in a jiffy.